I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, are these markets being manipulated? And if they are, how are they being manipulated?
Well, I don't know about all of the how, but I know some of the how. Obviously, cutting of interest rates and QE and those sorts of things are forms of manipulation that we've seen over the last, 20 years, really, and before. I mean, there's always stories of market manipulation and, historically. But following the 2009 top, with all the stuff, the 2009 low, the stuff that we saw coming out of that bottom, obvious manipulation, of course. You hear the stories about the PPT and all that, I don't know. No one can prove that. I'm not disagreeing or agreeing. I tend to agree, but you can't prove those sorts of things. But what we can see, and I've talked to a lot of technicians about this, it's become so blatantly obvious in the last couple of 2 to 3 years, really. I started noticing it, I would say 14, 15, and we've really saw it in the last year. And that is targeted news, manipulation with news. And, as the market rolls into a critical technical juncture, it always seems to happen from a technical perspective. You see it because it seems to always be right at that critical point. And, digressing back to last year, remember we talked about how there were the leaders and, different sectors and various indexes and averages were leading the way, and the industrials and S&P were providing cover for the setup that led to the decline into the December low. Well, going into that December low, remember there was, we got a China deal. No, we don't have a China deal. We got a China deal. And looking at how that news would break, it was like trying to control the slide, let it down easy. And, you remove the deal, then we got a deal, and you just kind of control the descent. And, you see it in many different, facets, if you will, with a number of topics. And then this year, as we came out of the 2018 4-year cycle low, everything started moving up together and kind of confirmed up until about April. And then we started seeing, we talked about this last week, we started seeing the leaders again, and the cyclical structural failures in the various indexes, averages trying to roll. So the setup is trying to take hold again. And every time we get into one of these things, think about it. Need to cut rates. We'd see Trump talking about the Fed and, pointing the finger at the Fed. We need to cut rates, and that was good for the market. Then, they talked about here just last week or so, the big news was that, the 1 year, the 2 year, whatever, moved below the 10-year. Well, there's been all kinds of yield curve inversions that we've been watching and talking about over the course of, it started last November, really, when long-term rates, or longer-term rates, hit the wall and started turning down. But, all those other inversions didn't matter, but all of a sudden this one does. And then there's talk of a recession. Then Trump comes out, no, there's no talk of a recession. Everything's good. But then at the same time, he's talking about, a stimulus package and some sort, I don't know the details, I just heard a blurb about it, but cutting some the payroll taxes and that sort of thing. And then, some other a friend of mine was telling me this morning that one of the Fed governors said something to the effect that it was a mistake to cut interest rates because the economy's good. And so, yeah, that is manipulation. They are absolutely targeting the market and manipulating it with news and these stories and these unexpected reports with jobs numbers or whatever. Absolutely. That is targeted manipulation.
Yeah, it seems, too, it's a deliberate whipsaw. One day, the talks with China are going great, then you find out the next day, talks weren't even taking place.
Yeah, I know, and that's what I'm saying. I think it is trying to control any kind of weakness, and it always comes at these technical. When you look at it through through the technical eyes, it always comes. And really through the eyes of, from the cycles perspective, it always comes at the very critical points. And that's exactly what they're doing. A friend of mine actually, remember when Trump was going to put the tariffs on Mexico. And a friend of mine sent me a text and told me about it. And I immediately responded. I said, yeah. And I said, this is another tool so that they can be taken off. And so as I recall, now this is from fuzzy memory, but I immediately replied with that. And as I recall, that was over a weekend, and then it was like on the Monday or short order. I mean, it was very, very short order. All of a sudden they were removed. And that's stimulus. They're trying to stimulate. It's all manipulation to try to hold it. And the theory, I think, is obviously if you can kick the can down the road, as they say, and help engineer and create a bottom, then one thing begets the next. The shorts have to cover, and they just extend this thing. And that's what's been going on, and that's what has made this bubble top so brutal to watch. It's just worn everybody out. And they have been very successful. Hey, I have to give credit where credit's due. They have done a magnificent job at getting us here and maintaining it thus far.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, how big is this so-called big lie?
Well, I think the reason for all of this, the big lie, if you will, the targeted news, manipulation, whatever you want to call it, is that they know how that this is a bubble. They know how bad the bubble is going to be. And it's kind of like taking your medicine as a kid. It tastes bad. And if you can take it an hour from now, hey, that's better than taking it now. And then in an hour from now, if you can take it another hour, that's better than taking it. If you can put it off, the longer you can put it off, the better it is. And I think is maybe the thinking. But in reality, the worse it's made it and the bigger the bubble has got. Now, since 2018, we've really gone nowhere. We've been sitting with this massive top trying to form. But I think the fact that they have been I guess the word would be aggressive with the manipulation at this point in trying to hold it is because, that's telling. That's telling you something. It's telling you that something is wrong. If everything was so great, then why the desperation? people, they're not thinking or looking at this, I think, from the right perspective. The cut that we saw back in July, I think we talked about this, was an unprecedented cut. If you look at the Fed follows the 3-month T-bill rate. And if you look at that data going back into the 1940s, is as far back as I've got it, they've never cut with that spread as tight as it was in July. Well, why? Because the market wanted that cut. It was priced in, and it didn't matter. That's when things cracked, right after that, if you think back. And so that didn't matter. And so it's going to get to the point eventually where none of this stuff, that the overall setup is going to get heavy enough to where these practices are not going to work. But as long as they work, the reason they're doing it is they're trying to hold it because they know how bad this is going to be. They know what the bubble it is. And even President Trump talked about it being a bubble before he came into office. Well, look where we are now compared to then. So it's even much more of a massive bubble. And then I've talked about the sixth economic cycle since 1800 turning down. This is all tied together. We have that natural cycle trying to roll. We have this bubble in equities trying to peak. We have all these things, the inflationary forces of that sixth economic cycle trying to turn down. We have the inversions of the yield curve. We have lower interest rates, which is deflationary. We have all these things gelling and coming together. So you bet, I think it's going to be global is an understatement in nature. I think it's going to be far-reaching, and who knows how bad is going to be. I think it's going to be far worse than 2009. Probably going to dwarf what I say we saw, but what the world saw in the 30s. This is a much larger bubble, and so I think that's the reason in trying to hold it. You don't want the inevitable, but it's eventually the setup's going to become so heavy that none of these things are going to work, and then it's going to crack, and then it's done.
Is this case of manipulation going to increase to ensure that President Trump has a healthy economy right up till the election?
I don't know the answer to that. I think obviously those efforts are going to that card's going to be played. They're going to try to hold it. I mean, at least the Republican Party and the people that want to see him elected, of course, they're going to want to try to hold it as long as they can and as best they can for a re-election. The question is, can they? And as every day that goes by, this thing, or every week or every month that goes by, this thing gets on increasingly thinner and thinner ice. I don't know. I don't know if they can hold it. I mean, if I had to guess, my guess would be no. I think this, it seems like it's so inevitable that it goes between now and the election that I just don't see how they're going to be able to do that. Maybe they can. I mean, they've done a magnificent job, but if I had to give you an answer, I'm going to say no. They're probably not going to be able to hold it. And that if they don't, then he's not going back in, obviously. I wouldn't think so. Historically, if an economy turns bad, the president isn't reelected. So, I would say that would be, probably a thin chance if it did go.
We'll have more with Tim Cyclesman Wood right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, everybody's saying gold is the place to be. It's gone up pretty dramatically in the last few months. Is that upturn going to continue if the stock market takes a dive?
I don't think so. I don't remember from interview exactly what we talk about. I do them and move on, but we talked about the 9-year cycle and the evidence that it had peaked, and I openly admit that I didn't think, and based on any historical precedents, and if I had to make the call again based on the data at hand at the time, it looked like the 9-year cycle had peaked. But we saw this rally. It's been a good one, but I think it's been another push retest into a 9-year cycle top. It's not. I don't think it's sustainable. And the reason I say that is that, you look at some of the historical relationships between the raw materials data, the CRB index, and, they don't move counter trend. They move together. Now, there are periods where, there's transition times where the cycles, nothing turns to the day or even the week or maybe even the month, but you stand back and look at the chart and you go, oh yeah, it's the same. And it's the same. And we've seen the continued weakness with commodities, raw materials, and the odd one out is gold. So, looking at that historical relationship, yes, it's been a good rally. It's been an unexpected rally. And I still have an intermediate term buy signal on gold. I think we did talk about that last time because I remember mentioning that. And it's trying to make an intermediate term top. Until I get an intermediate term sell signal, it is what it is. But when we get an intermediate term sell signal, then I think that gold's going to be at a real potential to turn down in unison with the CRB and raw materials. So looking at those historical relationships, I don't see it. There's no way I can take all that history and just dismiss it and say, well, this time's different. There's no basis for that. Maybe it is, but I have to go with that history and those relationships, and so I don't think this is sustainable.
Tim, what's the overall advice you're giving your readers right now?
Well, I say advice. It's more the research. It's the advice is that this is an absolute, I think, no question, bubble of, how do you even say it? Biblical proportion, if you will. I think that the downturn is going to be, like I said, global in nature and dwarf anything we've ever seen before. But at the same time, the setup is not complete. We see the market trying to take hold. We've seen this going on since 2018. This top has been trying to take form since 2018. What we're seeing this year is a continuation of the topping process that started last year. And so it's holding. And so my advice is that, just simply be aware of what's going on. I know that there are some people that are, still in the market, and that's great if you have the stomach for it. But the danger is that the backdrop of this overall setup, you wake up one morning and it's going to be on. And if people are not aware of the environment that they are operating in, then you don't understand what's happening, once it starts to unfold. So there are some specific, structural indications, some stuff with Dow theory, some indicators. There's a number of things that we're watching to tell us when it's on. And so I'm directing people toward those things. And then, watching gold, of course, closely because, we want to identify that intermediate term top when it happens. And at the same token, if something else really is going on, I want to be able to identify that as well. And then with the dollar, if there's something really going on different with gold, then it should show up with the dollar. So we're watching that very, very closely. At this point, I'm still bullish longer term on the dollar. We remember way back in I think it was February of 18. We talked about the longer term low in the dollar, and that's right on course. And then we're watching, of course, commodities and trying to put all these parts together in the research letter. It's beyond a newsletter. I call it a research letter because that's what it is. And if something is going on with gold that is different, then we're going to see that start to develop with not only the dollar, but we'll start to see something else going on with raw materials and commodities that will tell us that, hey, they were wrong, gold's right. And so we're watching all these pieces, parts, as this tremendous top comes together. And then what someone chooses to do with that information, if we see it come together and say, hey, gold peaked, or equities have topped, or the dollar's doing something unexpected, what someone does with that information is completely up to them. But I provide them with the research as all this continues to develop and evolve.
Tim, thank you so much for chatting with us.
Yes, sir. Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.